Let's talk tech stocks. Apple shares hitting a 52-week low, but analysts say there are several potential catalysts for growth on the horizon. I want to get over to Steve Kovach, who joins us with that story. Steve.
Hey there, Andrew. Yeah, so Apple shares are also wrapping up their worst year since 2008 on top of that 52-week low. iPhone production problems weighing on the stock this year, but some potential growth catalysts coming next year, particularly in services, guys. In fintech, Apple is expected to launch its buy now, pay later service called Apple Pay Later, and it will also offer a high-yield savings account for Apple Card customers. Advertising is another area to watch. New App Store ads launched this year, and Apple is likely to look to other surfaces across its platforms like Apple Maps and Apple TV Plus to grow that business. Now over to the hardware side. The big question right now is if iPhone demand holds on into the next quarter after missing all those shipments in time for the holidays this quarter. Also expecting that long-rumored augmented reality headset in the second half of the year, and that would make it the first major new product since the Apple Watch launched back in 2015. That's 8 years. Puts Apple in more direct competition with Meta, and Tim Cook and company will have to make a compelling case for the device that Meta has failed to do so far. But some pockets of worry, too, guys. Dollar expected to remain strong, at least for the first half of the year. That hurts Apple's services business. And App Store spending has been falling, by the way, all year, which Apple blames on a drop in gaming sales. Andrew?
Steve, I mean, when you look just at how investors are supposed to think about this for 23, what's the answer here?
Look, right now we're facing this environment where everyone bought everything. Those first 2 years of the pandemic, there was this huge pull forward demand, particularly for Apple and the Mac business. By the way, Apple warned, Andrew, that the Mac business is going to drop significantly year over year this quarter because there's just such a huge influx of demand in the year before. So there's that issue, and whether or not they can keep demand going, at least on the hardware side. And then all these attacks from regulators, like we were talking about yesterday, on their services business. And then that strong dollar has just forced them to raise prices in places like Japan and Europe.
I just wanted to ask you one sort of curveball question.
Sure.
We've been talking about TikTok all morning and what's going on in the U.S. government related to TikTok. And I'd raised this question just a couple minutes ago.
I heard you, yeah.
Is there any pressure on Apple to try to either ban TikTok itself from the U.S. government and the sort of cross currents and complications and conflicts, if you will, of the relationship that Apple has in China?
Yeah, this is so complicated. And look, we know that Apple has sometimes had to kind of, I guess, for lack of a better term, compromise on their values when doing business in China. But here in TikTok is a different case because as long as they adhere to those App Store rules and Apple doesn't have any evidence that they're, purposely breaking or accidentally breaking those rules, then it's allowed to stay on the platform. It's, I'm not aware of any kind of rule that says, customer data can't be stored in China in the App Store. So if it's not violating the rules, Apple kind of gets to wipe its hands clean. And keep in mind, big developers like TikTok, Andrew, and Facebook and Twitter and so forth, they talk to Apple on a regular basis, usually a weekly basis, these major apps that are a big part of the app or the iOS app ecosystem. So they're in constant talks with Apple for sure to make sure they're complying with whatever rules Apple has. But of course, we know the Treasury Department might have different ideas.